Welcome back, everyone. This is Live Thursday, as usual, except this time around it's going to be public. So we're gonna open this chat up to everybody as well, because I haven't done one of these in a while, so I figured it is time to do so. I did have the other setup before, but you can see this is my old setup, very similar to a year ago. However, I still have this sort of a camera as well, just to make it a little bit more interesting. It's the first time that I'm using this angle, so hopefully it doesn't like blow up on me or whatever. But yeah, I just thought it would be a little bit more interesting to have a couple of angles so you can see all my screens, you can see my bulb, the tumbler that actually I'm going to use now because it's bloody hot in London still. We're having a very, very weird September. Usually it's very cold by now, or not very cold, it's like pleasant, but not quite a heat wave. But today it just seems like it's actually another very warm day. Obviously, I'm just gonna do my fuel because I am in need of a lot of caffeine today. All right, who have we got here? We've got Giles, we've got Mohammed, we've got Jason, Silver Bullet Trader. I like the no end letters there. Silver Bullet Trader. Dr. Grant is here as well. Thank you. So hopefully, like I said, the whole setup does hold up. So today I'm going to go over my new DAX funded account because I figured, first of all, I wanted a DAX funded account for a long time, and second of all, I realized that if I keep going for these like massive accounts, some people will try and follow. And while that's not a bad thing, it's going to take you a very long time to actually reach the target unless you can confidently trade 4 things and do like 6 trades per day, which, let's face it, most people can't do. But the whole point is not to be all ballsy and to go, hey, I'm the king, I'm doing like 300k apexes and I bought 20 of them. The whole point is to actually get a funded account, to keep a funded account, and ultimately to get to the payout. And you're not going to get there with a 300k account if you've never been funded before. Like, you have to understand that like this funded account is probably like my 40th or something, because every time you guys say, hey, did you hear of this company? I would be like, yeah, actually, I did hear of them, but I've never done a challenge. So I would do a challenge to see how it is, what their data feed is, how they behave, the communication, and then inadvertently I end up with yet another funded account. Does that mean that I trade all of them? Of course not. But yeah, I do have quite a lot of them that I just don't use. The whole point of the DAX experiment, if you will, is to show you that you don't need to trade like a lunatic and that you can get funded in a very short space of time. And then you also can get to a payout in a relatively short space of time by just trading one product once a day. Maybe twice if you had like a 2.5 our target or something, and you have enough budget on the day. But for the most part, you're actually going to get that there faster if you're very careful with the quality of your trades, with the products that you're trading. Now, incidentally, I quite like trading DAX for London. I used to quite like trading GBP New Zealand dollar for London, but obviously in the futures you have to do this weird thing where you have a synthetic pair, because the GBP New Zealand futures technically exist, but nobody trades them, so there's no liquidity, and therefore you have to come up with a synthetic forex pair. Anyways, let's not get into that right now. Rita is here. Hello, Rita. Very good to see you. Then we've got Abby, and we've got Wixel. Don't know how to pronounce that, but welcome, yes. Okay, let's have a look at what is going on in the markets first. I want to talk about gold, because gold has been going through a bit of a weird reduction in liquidity, so I need to run you guys through that. Let's make this This is already as big as it is. First up, starting on a larger time frame. As always, these are futures, guys. So whoever is here due to my Forex funds, what do you call it? The shorts that I did. I do trade futures only for the reasons that I explained in those videos. Futures are regulated, and although you do have companies like Apex that do fund you into a SIM account, they still have to abide by the futures regulations because the data feed is not set by them. It is not, they don't set the spreads. It's the exchange that effectively sets the spreads. So there's no dodgy business like you can have in Forex. And this is why I have always been a very strong advocate for futures over Forex for many, many years. And I try to steer everybody from Forex as such. And, you can trade Forex futures. It's the same thing. It's just you're going to have to change contracts like every month. But apart from that, everything else is very, very similar. You have same strategy, same level, same everything. It's still a price feed that you're doing. It's not like a completely new vehicle. It's not a new vehicle. It's just literally a slightly different asset class that behaves pretty much in the same way, but it's more regulated. So what's not to like? All right, slurp of Monster. So large time frame, there is a bit of a range on GC. So we haven't really, this is a weekly chart if you can't see what's going on. So with such a large time frame, you're not going to be looking necessarily at, here's a supply, here's a demand, here's another supply, because whilst that does work for intraday purposes, that is a very, very big time frame. So I don't think it's very wise to only use these levels if you're going to trade intraday. However, for context and a directional nudge would be the right word, I guess. This is pretty cool. Okay, so you have to have that bird's eye view, which gives you the context. So now I know that there is a range on the weekly chart. But it's not really telling me much. It's not giving me the intraday sentiment. It's not giving me the actual levels. This level here, you can't use that for intraday. It probably won't get reached for weeks and weeks, maybe even months on end. So we can't really use that. But for context, it's a very good thing to start from those very, very large time frames. Now, the daily chart is something that I look at every single day. You guys know this. Whoever is a member here, you know that I never start a live stream just by going 5-minute chart, whack. Oh, I'm going to do a trade now. So I never do that. I always like to match up the larger time frame sentiment as best as I can with whatever is going on intraday. So on the daily chart, I can see that the market has a bit of a smaller swing here, but right now the Blahtech ST is picking up this daily swing. However, I can see there's another 4-hour thingy in here, which will be more suitable. But what do we need to know? So we need to know that we are in the middle of the demands here, and supplies. So we actually have a decent amount of space before the market hits the real demand where the buyers appeared previously. For my larger time frame, I do use a very old concept of supply and demand trading. And I know that Inner Circle Trader has blown up since 2019 and that he calls his thing smart money concepts, but really it's all the very, very similar thing to the supply and demand trading, which is what has been in existence for like 20 years. Everything else is up for debate. I do think that he is very, very good at reading price activity, and it's great that he's given everything for free. But like somebody on Twitter said, that Marcus Stalker's method is more like maths, whereas ICT is a lot more like a science where we work on conditional logic. So if this happens, then we do this. If this doesn't happen, then we can do this. Whereas ICT concepts are a lot more like what if, and then I think it's a very, very good way to put it, because you have to experiment by yourself a whole load, and that is what takes the most time. However, the stuff that he talks about, it's fine. It's just that I see some of the parallels where I do believe he's overcomplicating things. However, if that's something that's working for you, that's great, but please consider also marrying that with something like market profile or similar. I mean, market profile has been a total game changer for me like 10 years ago. When it came to intraday, because I was a swing trader. I traded only euro dollar for like 5 years, from 2007-8 up until 2012, and then the market kind of changed, and I had to do something to obviously keep being a trader, because I spent a whole year not really making money, not really losing money either, but not really making money. And since at that time that was my sole source of income, that was obviously quite worrying. But luckily I went to an apprenticeship and they taught me how to do market profile, and then I continued to do that when I was back in London, and I looked for a remote prop trading firm, and I found TopStep. So John Hoagland became my risk manager, and then we started chatting a lot. And by the way, I think Ocean told me that he was asking TopStep to invite me. And I have had the official invite from TopStep TV, so at some point you will be seeing me over there as well. It's always very fun to go and hang with Johnny and with Mike, because I've now known them for quite a long time, and at this point they're more friends than any kind of business partners or whatever you want to call them. But yeah, it's always fun. It's always a lot of good chat, very educational, especially with John. Like, John has so much wisdom to share, and he's a pretty cool guy all around. So I'm really looking forward to that. I don't know when it's going to be. I literally just, I'm just talking to them. However, in the other news, there is another Discord which is free. It's by Paulie Walnuts, and I'm supposed to be in there on Saturday. I don't know whether it is going to happen. Again, I still need to get in touch with him. But yeah, if you want to like pop in there on Saturday, I think it's going to be somewhere around noon or something. But again, don't quote me on that. Just go to Paulie Walnuts, and he's going to give you the actual schedule. So I am going to get in touch with him tomorrow just to kind of run through everything in preparation for that. But yeah, so let's continue on with this gold. So nothing much to glean from this daily chart. We have some middle of nowhere supply. So yeah, that could be an area of interest, but it's a little bit far, considering that we've already had some buyers stepping in. Right, let's have a look at 4-hour chart. Now this is where we get to that intraday time frame. This is where it gets interesting. So one of the things that you want to look at is where the largest sellers have come from. So it starts with this 4-hour chart. Now be mindful about overnight trading, because when you have very slow overnight session, Asia session, that can kind of look like a consolidation, but actually it's just lack of activity, and that's like very, very different than active price agreement. So some nuance there. Brian says market profile is a game changer for me too. Knowing it's a neutral day and to lower expectation has helped out a ton. Yeah, you see, this is another thing with matching up sentiment. So let's get into the intraday stuff. I don't really see that much here. I do see that some sellers have stepped in here. We do have a little bit of a reaction, but there's also another larger supply coming from here, which was also reactive. However, it's not really giving me open sentiment, is it? So it's not going to really help me to know where the market might actually go. It's just like, well, there's a supply. It doesn't mean that people are going to sell from there. It really doesn't. I wish it did, because it would make everything so much simpler. However, because we are intraday traders, and you do have to put a lot of stuff together. So even though it's not rocket science, there are a lot of moving parts to it. So that needs to be taken into consideration. So now you can see the orange rectangle that I drew from the larger time frame. And now we're going to get into the profile. So let me make this a bit larger and clean up the chart a little bit so that I don't confuse you. So the first thing that I like to look at is the previous day's value. The members here know this. I'm like a parrot. Previous day's value, previous day's value, previous day's value. Polly wants a cracker. But why is that so important? It's because when you have business that was going on at one particular area yesterday, and then the market moves away from that, that can give you a pretty good idea of which side the imbalance lies on. Today we're opening below the yesterday's value area. By coincidence, yesterday's settlement and the value low are exactly the same level. So let me just switch that off quickly. Settlement price is actually something that's pretty important too. And the settlement price that I have on here is a part of Blahtech VWAP. So it doesn't just have VWAP, it's got settlement, it's got standard deviation curves, and it's obviously got VWAP. Okay, so now you can see this purple line. And you can see this purple line here as well. There it is. So let me just highlight that. That's the yesterday's value, right? I'm using the extended mode on the value area lines just so that I can see exactly where we are, so that I don't have to go all the way back and then just go, oh, is that the value low? Is it higher? Is it lower? So it's just easier to extend it. But actually the market ended here. You have these dashed lines that are telling you this is where the session ended, right? So what is the highest probability setup? Because I'm a big data person. I'm a nerd. Yes. I know I don't look like one, but trust me, I am. I like to look at the value low. So the outer edge of the value area is a very high probability reversal point. Why? It's not because I made it up. It's because it is a level that a lot of people look at. It is a distribution curve from yesterday's trading. So anytime you move away from the distribution curve and then back to it, usually the market tends to reverse from that area. And that's kind of what we're seeing here at the moment. Another thing that is a part of my system, there is something called the average session range. Now the average session range was a little bit higher, and if Giles is in here, I actually set to, because Giles was trying to do a value low reversal, and I did say, well, since the average session high is so close, now while we were talking, let me just kick off Blahtech backtest mode. While we were talking, we were in this candle, so this hasn't happened yet. So I was like, well, you know, when it's so close, I would like to see average session high get reached first. Now, average session high is my concept. It's kind of like the average true range, but it just uses the session specific times to figure out what the range should be. And for me, it's been a total game changer. Again, it is my concept, but once it became clear in my mind, I was like, oh my God, I must tell others. It was like a very, very cool discovery for me. So yeah, once the average session range was done, and I'm going to drag it, these dotted lines turns into dashed lines, and then we can start looking for the entry. What time frame you're going to use for that, I really couldn't care less. Now today is probably a bit of more of a responsive day because GC has been a bit responsive. We're going to talk about that. So anytime you have a limited auction, which is what this is, you really want to focus on the extremes where your session highs or session lows have happened. So never mind VWAP and stuff that is usually not that great, but today we do have a one-sided extension of that first hour of the trading range, which is also used as a reference point in market profile. That could be an option at some point. But again, for now, we don't have that level. We don't. The only thing we have is the average session high and the value low. So that calls for some kind of a short setup. So there's no thinking, there's no like, I need a crystal ball, or I feel like it's going to go this way. Because if you feel and you've not had an experience, you can feel all you like, but that is not really a feeling. It's just a weird impulse that you're having. It's not based on any concrete facts. Now, when an experienced trader says, I think it's going to go this way, he's not just using the gut feel or a crystal ball to do it, right? To call a trade. Usually we use a tried and tested probability levels, right? We know that we've done so many, like whether you track it or not, but you know that you've seen a particular level 1,000,000 times, and you know that you've done like over 1,000 trades with that setup, and that's where the gut feel comes from. So when I say, well, I don't really think this is the best trade, maybe you should look at, a little bit higher. It's not my gut feel talking, it is the experience talking. So even though it comes across as a gut feel, it is actually based on data and a whole bunch of years of doing these sort of setups over and over, right? So very, very different. So now that you potentially have these levels, because it's a limited auction day, I wouldn't really chase something called the failed auction. So, you don't want to chase all the way to the other side, because if it's all a little bit slow, like GC has been very, very slow recently, you want to limit your profit expectations. You want to grab what's on the table so you don't have to chase a statistically viable target like we normally do, because honestly, that would be a little bit wrong, and I'll show you why. So first of all, we've had a massive reduction in ranges, and this has been happening throughout the summer, but it gets particularly bad in August, and then carries on through September, and it doesn't really come back until the end of September. 107 ticks for the COMEX session is a rather pitiful range for this particular product. Oh, sorry, Jeremy, I didn't see you there. Hey, how are you doing? Sometimes I will miss messages as I'm talking, as you know, but I do catch you guys. So basically, when it comes to ranges, they are your volatility indicator, right? So if you know that throughout the last 3 years, for the most part, we've had over 250 ticks, 300 ticks, 320, 250, 230. So that have been the ranges that gold normally has, right? It's not unusual for GC and CL, crude oil, to have ranges of about 200 and 300 ticks on average, which means that some days will be bigger, some days will be a little bit smaller. Mike has joined us. Hi, Mike. Good to see you. And whenever you get the dwindling range, if you've used a particular stop loss size, let's say you're using 30 ticks for your stop loss or 35 ticks for the stop loss, but then you have a reduction in range down to half that amount that you were using in the 250 tick range. Is it still a good idea to use the same stop size, the same target from the larger ranges? It isn't. And you know why? Because suddenly you're going to struggle to get 2R, suddenly you're going to struggle to get 1R, and suddenly none of your trades are going to 1R. So it's like, am I stupid? What's happening? So I want to make a clear distinction between the market conditions changing, the liquidity changing and dwindling down, and you being a crappy trader, right? Because those two obviously can be mixed up. You can have dwindling ranges, and you can have underperformance as a result of that. But you need to know the real cause. Now, the problem is when people don't have a systematic way to figure out whether the market has changed since the time that they were doing really well, that's when the trouble starts. So now you're like, well, I feel like I'm up it. I have no idea what I'm doing. Something's changed, but I don't know what's changed. And this is where something like the Market Stalkers method can help you, because you can tell what the problem is. You're not going to be just sitting there scratching your head going, oh, why is this not going? No, track the average session ranges. If they come down from 250 to 100, like they did now, something needs to change. So your stop loss size really needs to go down to 25 ticks, maybe even 26 in even quieter markets. But I will say this, when the market falls below 100 ticks, I exclude it from my tradable instruments. Why? Because it gets extremely frustrating to do that, to trade that. What you have is the 30-minute candle spans that are still 30 to 50 ticks wide, but the entire daily range is now only twice that amount. That's a very difficult market to trade. Very difficult. And you are going to think, oh my God, I can't trade for shit. But that's not exactly true, because you're still finding levels. If you're still choosing the right trade locations, but for some reason your trades are not going to the desired target, then look at the liquidity. Look at the liquidity. Avinash is here. Hello. And Nate is here. Hi. Very nice to see you guys. So yeah, we're talking about GC. If you've just joined us, we're talking about dwindling liquidity, and we're talking about stop loss sizes and how it's not the same using a 35 tick stop in a 250 tick average session range. And then we have 100 ticks for the average session range, but you're still using 35 ticks. Something has to change, right? Your stop loss size needs to be scaled to the liquidity of the product that you're trading. And that goes for any stop size that you're using, okay? If you are successful in using 15 ticks on something, excellent. But I've seen a lot of people who are using 15 ticks on ES, and they maybe started trading ES probably when I started trading it in like 2013, 2014, and I absolutely hated it, because back then it was moving like 4 handles per day. That's like 12 to 16 ticks. And now, of course, when people are talking about using an 8 tick stop back then, that's not that bad, because it means you're kind of halving the session range and then, or halving the day's range, and using that as your measure for the stop loss. But you can't be using an 8 tick stop loss on ES when we have the 113 tick range right now. And if we look at the COVID ranges, they were nuts. They went to like 600-700 ticks. It was crazy. And yet people are like, oh, my trade doesn't survive longer than 3 seconds. Yeah, I wonder why. Because you're using like tiny parts of the liquidity. So of course you're not giving your trade a chance to survive, because you're using an inappropriate stop loss. So I don't know why more people don't think about this. All right, so let's have a look at ES. I know that a lot of you are obsessed with ES. I don't know why. I hate the bloody thing. And then I'm going to go over my DAX experiment, which I think would be a very achievable experiment for most people. I also want to talk about dopamine again, and why many of you blow the funded account in 3 days flat. So we have some stuff to talk about. But ES. So what's going on with ES? Again, starting from a larger time frame. This is a range. We are in a supply, some kind of a supply here. And now the market is starting to weave around it, right? So at the moment, nothing is really decided. All that's known is that this is the range that we're working with. And again, I have noticed that ES ranges have dwindled down as well. You should expect about 150, 200, maybe 180 as an average. But we're down to 113 ticks for the NYSE session. That is pretty tragic. So, but you know, it's not that unworkable. It just means that things are a little bit slower for whatever reason. It is not unusual to have the September behave a bit weird. Traditionally, it is a weird month because everybody's coming back from the break, from vacations, because August is traditionally a bit abysmal. And then as the people kind of start trickling back into work, slowly, very slowly over the entire month, the liquidity starts to come back. But if we're going to be really, truly objective, it doesn't really come back properly until October. So that's something to keep in mind. At the moment, we're dead in the middle of this little tiny range, so nothing is really clear on the daily chart. Let's have a look at the 4-hour chart and zoom out a little bit more. There is a swing here. So the 4-hour Q points, which is also my concept, they have kicked off. And they are now using this low as a reference. So this is a new low. And we have crossed that, we've definitely crossed that middle area. So now, from like a more weekly point of view, this area up here would definitely be a good one to get involved. Yeah, so let's have a look at the 30-minute chart and profile, sentiment, and what that tells us. Make this a little bit bigger. Clean up the chart a bit. First up, where did the market open? It was a little bit of a gap up. So when the market opens, this is your value area from yesterday. Here it is. So the market opened all the way up here. You see this red box? That means that we opened up slightly outside of, well, quite a bit outside of yesterday's session range. When that happens, you have a very decent chance that the market is going to test the distribution curve first. This is something that I spoke about already. And it's exactly the same setup as the one we're seeing in gold, except gold has a slightly less of an imbalance. And here, the market just touched the value high and off it went. Now, this is an equity index, so no matter what's going on, you will have this upward bias on a lot of the time if you've been trading long enough. So if you have a look at the Blahtech indicator here that looks at the supply and demand as trend, a very different way than looking at higher highs and lower highs and all of that nonsense. This actually looks at broken areas of supply and demand, and it tells you which one is currently in force. It doesn't tell you, sometimes you can be in a correction, and then some people will be like, but it's a downtrend. No, it's a correction, because we're going back to the demand. You can short it for an intraday time frame or a very short-term swing for a few days, but it's not a downtrend. A downtrend is something completely different. A downtrend definition is when the sellers are in control. And if you don't have any buying zones, how are you going to know whether it's getting broken or not? So it is a correction. So until you come across a significant demand area and that gets broken, you won't know whether you're in a downtrend, okay? Jeremy, I would have considered anything for ES if it wasn't done exactly during the initial balance. I do not like trading the initial balance. If you analyze these candles, they are very psychotic. Why do I say that they're psychotic? Well, it's because you have these buying wicks. So it kind of went down, then it went up, and then it went down again, and then it went up again. I don't like to trade through that, okay? This is why I don't like trading ES for this time period, right? I like to trade it towards the end of the session when you do have some very, very high probability setups and reversals happening. But initial balance for me, like, you have to take thousands of trades into consideration, right? Every time I attempted to do any kind of trade, not just ES, but, you know, GC, CL, my main core markets, crude oil, I'm a commodities trader mainly, as you know. But basically, whenever I'm looking at something to trade, I want it to behave not like a bipolar person who's gone off their meds. Up, down, we're happy, we're sad. But I want nice, orderly price action that doesn't, like, remember guys, I'm 43. I'm not a spring chicken. I cannot handle things like, I wouldn't be a trader if moves like that is something that I get involved with and stress myself out every single day, okay? So you have to keep in mind that for me, like if you're a young person and you're like still like, yeah, I'm going to stare at the 2-minute chart and I'm going to go in. For me, the 2-minute charts and 5-minute charts are for a responsive activity day. This is not a responsive activity day. Okay. This is something that requires reasonably fast reaction times, and it requires you to stay glued to the screen and going, okay, value high, reversal, Renko, footprint, bookmap. Yeah, buyers, go in, like that kind of a mindset. Whereas the way I trade, you guys know, I'm like, 5 minutes, yeah. So even on a 5-minute chart, you have 10 minutes before you get your signal usually. Okay, that's a huge difference. And not very, like I would never be able to keep my trades for longer than an hour if I traded solely from things like bookmap and footprint. Okay, it's not to say that they don't have a purpose. I just think that a lot of people default to those sort of tools way too quickly. Like they default to footprint before they actually know the levels. And trust me, guys, it's so much easier when you have a reference level. And then you want to look for the auction to do something around there. Then you want to look for whether the market is absorbing the sellers that are still coming in. Are they having an effect on the price or not? But until you have that larger time frame context, I really don't see the point of just going, bookmap, buyers, big bubbles, they're coming in. Like, to me, that's just like completely a backwards way of doing it. And in my opinion, it's very difficult to trade like that. It causes a lot of over trading because you're not exactly sure what should happen because you don't have a reference level. You're just like, oh, I'm staring at liquidity. Oh, we've got long-term orders. Like, why are you doing that? That's so annoying. And every time I see somebody trade like that, I just see stress. I see them, like there's a pretty big YouTuber out there and he claims he's like 35. He looks 100. Like he looks like he's a man in his 50s. I was shocked when he said what his age was. I was like, are you kidding me, man? Like, why are you doing this to yourself? But hey, it's me. I like to be a little bit more chill. Okay, let's take some questions before we continue. Avinash says, can we also trust rejection from point of control when the open is above the value or... Well, no, it depends how far into the value area the point of control is. It will be a case by case. So, for example, over here, if you have had... So let me mark the point of control. This is the point of control. I did the whole 2 YouTube videos why I don't like point of control. And in the recent one, you can see that I am quite clearly giving you the stats over how many times POC acts as a key level. It acts really well as a target. But usually what happens is it clashes the core ideas of market profile, value, acceptance, setup, okay? So if the market just touches point of control and then reverses, that's fine, right? But you cannot have it closing inside value, okay? If it does, that's not a point of control acting as key level. That's value acceptance, in which case, most of the time, you will get the market just smashing right through it, okay? So if you want to watch that video... And, I will work on making the videos a little bit more interesting to watch because, as you guys know, I have had some health issues. And, even doing videos was like, just be happy that I actually, sat down to do some videos because most of the time I was just in bed. Luckily, I am getting better. However, when I talk about point of control and any sort of levels now, 2 years ago, I didn't do the stats, but I did it now in a more recent video. So I'm just going to give you a link to that. So have a look at that video, Avinash, and that should tell you a lot, okay? But for the most part, if the point of control happens after the market accepts value or the point of control is too deep into the value area, just don't use it as a key level. Like very, very few times in the span of 1 to 3 years did we actually see, it's like an 8% sort of event. that's not a very good strategy. So out of all the times that the market has touched POC, only 8% of the time, or something like very low, whether it's 5 or 8%. Just watch the video. This is why I do the stats, so I don't have to remember all of it. But yeah, it will be case by case basis. When you have a point of control that's very deep in value, it's probably that you're going to have a value acceptance. But if it's somewhere higher up, yeah, you might be able to use it as sort of like a helping hand with value high. So it doesn't have to be it doesn't have to be that key level. It could be a confluence, however you want to pronounce it. I'm Serbian and naturalized British, so my accent is a bit screwed up. But yeah, so you can, for example, have a whole zone, because I never look at one single price as a key level. I always look at it as a zone, and I think it's much easier that way. So if I have value high here and point of control here, I would just go, okay, so all of this is where I want to be a buyer. And then you can use whatever you want inside that zone once the market gets there. But as you can see today, it was not the point of control. It was yet again the value high. Yet again, that value edge that comes up is a high probability level across the board. Like every time I run the algorithm to count, it's a very simple piece of code. It just basically counts how many times the market is reversed at value high or value low. And across the board, value high and value low from the outside, they come out as winners, even above like average session and daily ranges. So that should tell you, something. I don't know why people are so obsessed with point of control. Just because it's called point of control, it doesn't control anything. It is the widest point of the profile. So if anything, if you have a very slow day, you're going to have a very, very wide point of control. But again, people don't think about that. They just go, point of control, it must have something to do with control. No, it doesn't. I'm sorry, it doesn't. I mean, I wish it did, but, again. Let's see, more questions. Francisco says, hi, everyone listening in the car. Woohoo! Very nice. Just keep your eyes on the road. Ivan says, what's the ideal trade location based on volume profile? I don't use volume like that. Okay, one of the reasons is because I do the supply and demand analysis first. So I don't use the same day or even the previous day volumes in that way, because you will actually get more information by looking at larger time frame areas. And if you see these boxes, they don't repaint or anything like that. These boxes represent the supply and demands, okay? And as you can see, when the market dipped into the demand here, this is ES, it pulled right up. But yes, it went deeper, so you can kind of drill into the level, and you will find a deeper level to fall back on. But you will know that there was a lot of volume being traded already when the market is here. Like, I don't need to stare at the volume area, because I know what I'm looking for with supply and demand. And don't forget that the large moves that make a difference, they are created by large buyers and sellers that sustain the move away from the price, from a particular price. So what is that? Well, that's volume. Okay, so at some point when you look at volume, when you look at tape, you will initially see these things called the sweeps around these areas of supply and demand. And when you know where to look, yeah, that might be helpful. But obsessing over low volume node, high volume node, again, I tested that idea, and it didn't exactly, like the high volume nodes brought very quick prices going through them. I don't need anybody to tell me where the price is going to pop to, because I can see where it's coming from in the swing. I can see where the interest was before, thanks to supply and demand. So again, in my way of trading, we don't obsess over the micro order flow and volume stuff that you can see miles away if you know where to look on a much larger time frame, like a 4 hour, 30 minutes, 1 hour. You don't need to stare at the volume nodes. You really don't. Like, I've traded for 15 years, and every time I tried to use high volume nodes or low volume nodes, I always found them so useless. It's like, by the time you guys see what's happening, I've already been and done my trade. And that's why I'm not a huge like, if it helps you, guys, if whatever helps you, go for it. go for it. But it doesn't help me personally because of the aspect of the supply and demand that I have in my trading. Okay. So I just wanted to make that very, very clear. You can go super complicated with your system. And I have known some people who are mechanical engineers by trade, and they create incredibly complicated systems. And they find it very difficult to explain that to others. I am not a mech eng. I was a musician. And even though I'm pretty analytical and I do have a couple of degrees, I am not a mathematician. I'm just not. I steer clear of equations and of calculations whenever possible. However, I am very analytical and I can code in Python. So that kind of helps me to come up with my probabilities. But at the same time, while the Marcus Stoker's method does have a lot of moving parts, it is not that complex. It's very logical. So this is why I think why so many people resonate with it, because I don't waffle on about this and that. Like, we just go straight to the point. What works, what doesn't work. There is no need to complicate things, and just adding more stuff to your system doesn't mean that it's going to be better. You know, adding RSI and adding market profile and then adding, maybe another oscillator and then also VWAP, because, that's not that different, but it helps because it's got volume. All of that stuff, you're just packing on the chart with things that you don't necessarily need to. So in a way, like, I know that sometimes my charts may look a little bit busier than they are, but at any one point for intraday trading, I have only a few things that I'm looking at. Let me just put my chart in the foreground, because otherwise the candles get a little bit washed out. I look at supply and demand areas on 4 hours and daily sometimes, but mainly just 4 hours on the day. I then also look at the supply and demand areas on the 30-minute chart when applicable, okay? And they won't be applicable all the time. Today, they're not applicable. I don't really care. On ES, there's nothing happening on supply and demand that I could use today. So that's not something that I will use. I will look at the open sentiment in regards to the market profile, TPO profile, not volume profile, okay? Even though they are reasonably similar, I prefer to look at the price rather than volume profile alone. And then also I look at the auction process today. So we have the open sentiment by using something from yesterday, but then the auction process is all done on the TPO profile from today. I never look at the previous day TPO profile, nor do I care. Why? Because when I was learning market profile, I tried that and it never worked out. The guys were like, oh yeah, P-shape brings like, shorts liquidating. The next day it should continue. It never continues. Like, I'm sorry, but it never continues. Like, there's so many untruths that are in the book that maybe they were true at some point, but over the years, maybe it got diluted, or I don't know, markets changed. Similarly, when Dalton says, value area acceptance is an 80% rule, it's not. If we're going to nitpick, it's a 58 to 65% accuracy. And that is heavily dependent on product, what time of day the value acceptance happens. Like, for example, in crude oil, value acceptance during the initial balance, 97% of failure rate in a period. So in the first 30 minutes, if you see a value acceptance, you have a 97% of chance that is going to be a fake out. But in something like GC, if you have an early value acceptance, that is perfectly acceptable and carries 65% of probability success. So that's the kind of way that I like to trade. Anything else is just like, well, yeah, whatever. We can add so many things to trades. And like I said, if it helps you, continue to do it. But it doesn't mean that I'm going to be immediately jumping after 15 years of trading successfully, just going, hey, I'm just going to be adding random stuff that I know is less accurate than the stuff that I'm already doing. So, Mike D says, I hate that twitchy, psychotic tendency about trading and love NQ. However, learning your methods have made me a much better twitchy squirrel. Yeah, you can still be a twitchy squirrel. And Mike, from what I remember, you are actually pretty good with your twitchy squirrel. So that could be your your YouTube name, Twitchy Squirrel. So we have Ray, who's Will the Beast. and then we can have Mike, Twitty Squirrel. Mike D says, do you have stats on prior session POC, or were you referring to prior session? Yeah, I was referring to prior session, but I also in that same video do have developing POC. And the problem with developing POC is that it changes intraday. So what I did when I was coding it up as a condition, I basically used, if the market created the POC, developing POC, so DPOC, in the A, B, or C period, sometimes even D period, depends on what product I was testing, that would be a valid area to test as a key level, because anything that goes very far into the session, it slows down, the volume is drier, so we really want to rely on the market events that have been created through like really lots of volume, which is something that happens in the first 2 hours of trading, and then it starts to wane. With ES, you still have this pop after the bond markets close, so you have another sort of second chance life sort of thing that gets breathed into ES, NQ, and YM, so all of the equity indices that trade during the USA hours. But for the most part, the DPOC that I was testing was the one from the first 2 hours of trading, and that gave very low accuracy. Again, as a key level, terrible. As a target, great. Like, especially if you have failed auction where you have a very large initial balance, DPOC can be an excellent target. So I still stand by my research that POC in general is a very good target, and whether it's DPOC or PPOC, previous DPOC, it's still a very good target, but it is a little bit of a crappy, unreliable key level. It's not that it doesn't happen at all, because it's, trading, so some things will definitely happen to the rate of 8 to 10% if you look at very large sample sizes, but it is not the kind of strategies that I like to base my trading on. I like to have an event that happens at the very least 40% of the time, but usually 60%, 70% and higher. So for example, when I say things like intraday reversals from day trading time zones that we talk about in the program, they are on crude oil and GC. GC has a 68% probability hit rate, and crude oil has 77%. And this is all not looking at 1 month, 3 months. We're talking about sample sizes of 1 year up to 5 years. Okay? Sometimes to test a hypothesis, I might do like 6 months, especially during COVID, because we've had a massive change in liquidity. But apart from that, it's all pretty similar. Avinash says, I find the volume nodes confusing. I don't use them. Yeah, I don't find them confusing, but I don't use them because I think they're superfluous. JBO says, do you see scalp? No, I honestly don't even know what that is. Jeremy says, can you review CL price action today? Have you taken any entries? No, I've been focusing on the DAX thing, and because it's been really nice weather, this is the last of the summer that we're having, I've actually spent a lot of time outside, so I don't really want to be trading. Sometimes I have my laptop out, but again, I just wanted to enjoy the summer that we never had, because honestly guys, it's been so shit in the UK. We've had a terrible summer. I was wearing a jacket in August. Like, that is unheard of. Terrible. And then suddenly, come September, we had this beautiful weather. So obviously, I haven't really been trading. But I have been trading during London because it gets a little bit glary and bakey in the morning. And then it gets really nice sort of from about 1 p.m. onwards here. Okay, let's have a look at CL price action as per Jeremy's wish. And then, Ivan, I'm going to answer your question. It's actually not just relating to ES, but it's actually like generally. So it is a good question though. Quickly on CL, we do have a day where we have a limited auction. I doubt that this is going to go too much higher today unless, do we have any events today? I don't think we do. What is it? It's Thursday. Yeah, so I don't think there's anything left for crude oil. So it's probably going to end up being a very boring session. Whenever you have a big or a bigger open outside of value. If you don't get that return to value within the first couple of hours, it is very, very likely you're going to end up either with a neutral day or with a limited auction day. So today we have a limited auction day. To hope that it's going to keep going up. Again, it is against the probabilities. So this is either going to, like, if I was going to guess what's going to happen, crude oil likes to do these things where I call them the asymmetrical auction. So the market kind of extends to one side, then fails to give a sustained auction to that one side, comes back into the first hour trading range, which is this red thing for those of you who are not market profile devotees, and then smashes to the other side and keeps going. Why do I think that this might happen? Well, we still have some stuff happening over here that would need to be maybe not repaired, but well, yes, actually repaired, because London kind of took it pretty far, and NYMEX it's just doing nothing. So I think there is a bit of a repair of the structure to come, and that calls for an asymmetrical auction, and the stopping point for that would be this value high, maybe a little bit higher, just so that we're not like being a dick for a tick, as we so lovingly say in the prop industry. Such a good saying. Don't be a dick for a tick. So yeah, instead of kind of go right to value high for target, maybe just go a little bit higher, 10, 15, 20 ticks above your reference area, because it is a bit of a jump. Crude oil is also having a vastly reduced liquidity. It should really have about 200, 250. We are currently sat on 138, so even crude oil is suffering from that post-summer hangover. So we're going to be looking for some irregular structures because of that. Because a lot of the times when this sort of thing happens, there is still a possibility that the market will test that distribution curve from yesterday, which is the value area in market profile. The distribution curve is called the value area, or as they eloquently put it, the 70% of yesterday's business. And again, very, very good way of putting it. Where was the majority of the business yesterday? And what is it? It's a distribution curve. So, yeah. I still think there is a very, very good chance of crude oil smacking down. Whether it's going to be catchable, that's a whole different ball game. There is the average daily range here, which is very synonymous to average true range. It's basically the same thing, except average true range takes in the gaps that you may have, whereas average daily range doesn't. So it just when you have a gap, you will still get a measurement of whatever the current range is, and it's going to start tracking exactly from there, from the open. So yeah, it's a slight difference. But yeah, I still think that this might be an interesting trade. Maybe not now, because now is lunchtime. I would definitely wait for something that I refer to as the day range fill. My market stalkers know what that is. I think it's still a little bit too early, but if you do catch that, you may want to kind of stay in and see whether it breaks the other side. And if it does, you will get single prints. So single prints will be very evident if we have the asymmetrical auction on our hands. I'm not going to go into what single prints are. Okay, Ivan, do you use overnight high and low and initial balance high-low for target, considering that overnight high-low breaks 60 to 65% and initial balance 57 to 60? That's very complicated. Okay, let me say like this. I don't use the overnight levels unless we have a neutral day or a slower auction day. If you have a very strong volatility day, there is no overnight level that's going to stop that. Do I use the initial balance edges? Yes, I do, for particular setup, an auction fade. Auction fade means that the initial balance is extended to one side only, not to both sides, so just one side. And then I will typically use the initial balance edge, the nearest initial balance edge, as my target. In the case of a failed auction, which is a different setup, you can use the other side of the initial balance. So yes, I do use initial balance range quite a bit for orientation, but it's not going to be relevant in every single date type. Again, this is all explained in vast amount of detail throughout level 2 and 3, modules level 2, module 3, however you want to call it, in the ProDev program. Oh yeah, I do want to say we decided to do a little bit of a back to school discount just on the bronze, so you can actually grab it for a pretty hefty 60% discount. So if you want to do that, you will need the code. I think the code is it below this video? If it's not below this video, you do have a link, and then it's going to be as a pop-up on your page when you get there. But I'll also give you the code. The code is FREEDOM. Why? Because freedom for parents. I'm sure that everybody adores their kids to death. However, I know that all of my friends who do have children, they get a little bit happy when the kids are back to school because they suddenly get a lot of time for themselves. And as you know, having kids is very, very constant. It's, you never get a break. So by having them at school for about 8 hours a day, it's, I can imagine it feels pretty good. It kind of feels like when my 8 dogs go to doggy daycare. I love them to death, but sometimes it's good to have a little piece of quiet, right? And because of that, we decided to do this little discount. And when you get into the bronze, if you ever decide to go into the higher levels, there's always an option of an upgrade. And even if you at some point are eligible for gold, which means you'll be working one-on-one with me, we still give you a discount on gold as well because you're already an existing member, so keep all of that in mind. So therefore, anytime we run discounts on bronze, it's actually a pretty good way to get in. Like now it's like $600. So, it's a very transformative course, like anybody in here can actually tell you. But yeah, so let's have a look at what Mike is saying. So do you think oil companies make more money trading futures than actually selling oil? Mike, I actually did do some courses about this when I was doing my whole RDR qualification, because I don't know whether I know then all of you, my members, my Marcus Dorcas family, you guys know that I used to be an RDR compliant trader, but maybe a lot of the other people don't. And you have to keep paying the membership and keep doing 30 hours of CPD a year. So I really didn't want to do that anymore, considering that I'm just a prop trader now and I don't really work for asset management companies. And I only worked for an asset management company for a month and I absolutely hated it. So yeah. Mike, the futures for the oil companies are mainly used for hedging. So they don't really use them to speculate and make a lot of money on them. It will be mainly used for them to hedge. Like, for example, if, let's say, Virgin Atlantic goes to a particular oil company and they go, hey, we want to contract with you for the next 10 years and we want you to supply all of our crude oil and petroleum or whatever for our fleet. And they look at the price in the futures and it was like, what was it? At one point it was like $9 or something ridiculous. And they're like, great, why don't we hedge the position there? And then for 10 years, whilst the contract is going, we have oil at $9. So it's a very, very different way. And mainly in institutional trading, futures will be mainly used for hedging purposes. So for example, if somebody comes to you with a very large portfolio, let's say they've got, 100 million portfolio. And they say, well, I own stocks in this, I own stocks in that, I own stocks in that. Can you hedge me for like the next 6 months because we have some risk events coming up, geopolitical risks. I would like to protect my portfolio. And then what the investing advisor will do, they will calculate something called the beta hedge, which basically tells you how many futures contracts do they need to have in order to hedge the position of 100 million in in the actual underlying portfolio. So that's basically the use of futures. We are the only ones, the retail traders, prop traders, we are the only ones who use futures to speculate. Institutions will not be doing that, okay? They are very involved in the movement, but their reasons for going into futures is entirely different to you and me, okay? For me, I'm looking for quick mispriced events that I can take advantage of within like the 3-hour period that I trade in a day. And usually my positions will pretty much be over within depends, but 10 minutes up to a couple of hours, maybe 3 hours if it's like a really slow day. But yeah, for them, they won't be doing speculative positions, and a lot of them don't even want manual traders anymore. So these big companies, they will want the trader coming in to be like a fresh-faced PhD student straight out of uni, and they typically go through a graduate position, and then they kind of teach them the portfolio theory. They sponsor them for the professional qualifications that you always need to have to work in those kind of industries, because they're usually client-facing. So yeah, it's a very, very different ball game, and quants are very desired, but it is also a very, very difficult industry to get to. Anytime you have any speculative positions, they will either be HFTs, again, that's PhD in statistics, maths, and all of that, usually from very top universities, and they just don't want manual traders. So for us, traditional prop firms are gone. Like, I don't really know of 3 of them that are still around. The rest of them, like Jane Street, Kirshner Trading, all of that, they are all just looking for quants. So really, I know there's a big uproar about the regulation in the prop world, and that's a good thing. I think we do need regulation, and if we can have legitimate companies left over, that's, opening the doors for us sort of cowboy traders, as I like to refer to us, because we are not institutional traders. We are small fish comparatively. Even if you trade with 20, 50, 100 contracts, you're still small fish, right? You might be making millions, but nobody cares, like, seriously. So this is why I think regulation, especially in the Forex prop firm space, is very important. A lot of scammers are operating in that space, which is very sad. We've seen the My Forex Funds thing, and that's just like, really? Like, how much of a greedy moron do you have to be to do that? Like, shouldn't you be celebrating a profitable trader who's doing something amazing? Oh no, but because everything goes on the sim, slip them to hell. Like, really? Thanks, mate. I'm going to keep to my futures companies, thank you. Where I know that James and Steve from Trade Day, they want you to make money because they will make their cut out of that, which is what a prop firm should be, right? Now, Apex, like I said, it's a little bit tricky because they do fund traders into sim, so that may have to change. So, grab the discounts while you can, man, because I'm not sure whether they're going to be so cheap if the regulator states that all prop firms now have to fund you into live. One of the reasons why I never put out my prop trading company out there is because I simply don't have that much funds. Like, I do very well, but I don't have 100 million to fund endless amount of people into live, and I don't want to go down the route of online prop firms. So I've never really charged for the subscriptions, not that there's anything wrong with that. I did go down the route of trading education because I tried to get profitable traders for 2 years, and it didn't work. Like, I just got a whole bunch of scratch traders and losing traders. Like, literally, there's one guy that was trying for 6 months, and nothing. It was like he didn't even inch 5% into the profit target. Not even 5% into the profit. Come on. Now, since I'm talking about that, Avinash, I have a fuck ton of Apex accounts, and I've just gotten another one, actually. So let me... I have never supported Forex, right? Never. In fact, if you go back through my channel, it's always Forex prop firms, sorry, futures prop firms. The 5 that I list on underneath every single video when you expand the below description box, you will always see 5 futures companies. You have never seen FTMO there. You have never seen My Forex Funds or any of those Muppets for a reason. Because I know how they operate. I will not be the person to recommend anyone to those types of companies. I'm sorry, but there's so much nonsense going on. At one point, I was in favor of Darwin X, which are not prop. They're not prop. They're investor funds, but their returns are quite abysmal. And I don't really like that they pit traders in a competition. It just breeds very weird, kind of like, oh, win investor funds. That's great. But then they have like 40 positions, and the ones who, I actually had a trader who managed to get up to 900,000 of their funding and only saw, I'm not even sure that he saw like 3,000 profit out of that, because they pay you out 15% performance fee. 15% performance fee. So if you don't have the money to scale up yourself, that's not a good avenue. Like, it's going to take you forever to scale up, and you have to be crazily consistent. It does not allow. And another thing, I actually had an argument with one of their, I actually know them, bizarrely. I know them. I went to one of their seminars or whatever in the city of London. They're not too far from, they're far from where I live, but, I used to work around the corner from them. And at one point they did have a seminar, so I went to meet them. Great guys, very passionate about what they do. But at the same time, I still think that they mess with the trader's performance. Why? Because they have that asset called the Darwin. So you're not trading your own account. You are, but then their Darwin algorithm scales you up and down. So what happened to my other trader was that he was doing quite well, but then he came across a period of drawdown, and he went into a drawdown probably for about a month. But whilst he was doing that, the algorithm started lowering the position size that it was actually trading on the Darwin. So even though the underlying account actually recovered and went into profit, the actual Darwin took 6 months to actually rectify. It was like punishing you for drawdown periods. Everybody's got drawdown periods. Everyone. I had a February that was very meh after 15 years of doing this, and you guys know how I trade. You cannot expect a trader to be like on the money all the time and then massively penalized. So in my eyes, the fact that they have a Darwin, they're doing the same thing as manipulating somebody's performance. So that's why I don't really agree with them anymore, and that's why I don't support them anymore. But out of all the Forex, ways of making money, they were the only ones that I sort of thought, yeah, actually you guys have something legit there. And I still think that, but it is, it's still a little bit suspect in my eyes. Okay, so let me get into this DAX thing. So basically about, let me drag out my Twitter. About a couple of weeks ago, I decided that I was going to do a DAX challenge. So that should be in my highlights. So pip_raider, like Tomb Raider, but with pips. Because Tick Raider doesn't sound that great. So yeah, this is my Twitter account. In highlights, if you scroll all the way down, you will see when I started this. So August the 30th was when I started it. I did that video about Apex allowing Eurex products, and yeah, it is $23 a month. You have to do it manually. You have to renew it manually. It won't renew yourself. I made a video about that. So the first trade that I did actually smashed it. Like I used 25 ticks for a stop loss, and it went almost to 3R. And then I decided that I had enough budget to try again. So the first day went swimmingly. Second day, I was actually on a live stream. This was a Thursday, and I traded, what did I trade? The New York session. So I actually broke one of my rules to only trade the New York session, to only trade the London session. So I was punished for that, and I ended up with a loss. So day 3 was okay, like nothing to speak of, but I did manage $493, so just about 1.5 hour, maybe slightly more than that. Finally, day 4 also went okay, but again, nothing much. Like, it's not like I'm smashing down 10 R. This is all like 1.1, 1.5 R, 1 R, 1.7 R, and then one day where it like kind of goes really well. 5th day was great because my one trade just went straight to target. 742 was 2.3 R, really good. And then day 6 was when I reached the target. One trade per day, one product, one session, $250 max. Loss. Okay, that's all. Like 111. Not grasshoppering around, doing one trade, then going into another market, then going into another market, and then more and more and more and more. Like, it's not how you do it, man. So this is my experiment to show you that by being sensible, you can get funded on a 50K account, Apex. You can pick it up for cheap in 6 days. Now, the next stage is the PA account trading. So it just started yesterday. As you can see, I've lowered. So up until then, I was trading 2 mini DAX, okay? Again, I'm still doing one trade per day until I get a little bit further into the profit. So not trading like a lunatic, one trade per day. First day, quite uneventful, 1.1 R. Nothing, right? Today, again, nothing that eventful, but I did get to 1.7 R. However, since I'm now using only one mini DAX contract, that's $150 per trade. So if I were to lose that, I would only lose 150, and I managed to get a pretty good trade. So I'm going to keep this going until the payout, okay? Because I want to show you guys that the restraint is the name of the game here. It's not trade as many things as you want, look like a complete muppet, and then oh, this didn't work, let's go to another thing. Learn your products. Go back through your stats. If you're not tracking stats, what are you doing? What are you doing? So, like I said, I'm going to keep this experiment going. It's sort of a demonstration of the method. It's a demonstration that I still know what I'm doing, because people obviously still want to see that, even after so many years. So, Avinash, I managed the trailing drawdown. I managed the trading drawdown by not trading large. I've never thought that a trading drawdown is a problem. If you don't trade large, if you trade within the means of the account, and if you limit your daily loss limit to something that is sensible, divide the maximum trading drawdown by 5, 6. I like to divide it by 10 personally, because it gives me 10 days to lose every single day before I blow the challenge. Okay, you always start your risk models from a worst possible case scenario. So if I were to trade like a complete muppet for 10 days, yes, I will blow the challenge. But if I have 10 days to blow the challenge, what is my track record? Well, actually on these challenges, I've shown it before, it's usually between 90 to 100% of winning days, okay? Now, I'm not saying that you will be able to replicate that, so don't aim to get funded in 6 days, but give yourself a good amount of time. You're probably still making mistakes. You can see that I rarely make mistakes, okay? I rarely do muppety things. It's not that I never do them, because let's face it, I have done them. I'm human. Sometimes I'm not feeling well. Sometimes I'm sick. Sometimes I'm a little bit tired. Nobody can be perfect, and that's absolutely fine. But you need to allow your loss limits to prevent disasters from digging a deep hole in your whole account. And the maximum trading drawdown is only ever a problem if you trade too large. If you go into a 50K account that has a $205,000 drawdown and you want to trade NASDAQ on 3 contracts, you're not going to survive a day. The maximum trading drawdown is your entire risk allowance. It is not a daily loss limit. Okay? It's not a daily loss limit. So treat it as the account balance that you've been given to begin with to prove yourself. So you have to scale everything down. And as you can see, it adds up really bloody quickly, doesn't it? 6 days, 3K. So what do you want? Do you want to do million trades? Do you want to do, 4 4 different products that you're not quite sure of probabilities, you're not sure whether you will do well, and you've never traded them. Why? For laughs and to like show everybody that you have big balls? Like, who gives a fuck? Do you want to make money or not? Or do you want to show off your balls? It's like, but I will say, every time I get a woman trader, we never have those issues. We don't have pissing contests. And actually, women are very different. Like, I wish that more women come to me for mentoring. Okay, I've only had 3 so far out of, I don't know, 200, 300 people over the last 3-4 years. So it's a very different experience. You know, you talk to a dude and he's like, oh, I've done like 60 challenges and I've blown all of them, and I got funded 15 times and I blew all of them. And then you ask a woman and they're like, well, I'm actually considering it. Like, yeah, I'm doing 1 challenge now. It's going okay, but I would like you to go faster. Like, such a different, you know, totally different mindset. And I think that most women would be smashing traders, but obviously a lot of women have different goals in life. They want to have children, they want to have a family life. You know, not everybody wants to be a career woman, and I can totally get behind that. It's not my thing, but hey. Brian C says, Dee, I look up to you so much. Oh, thank you, Brian. It's very humbling. I've been very hesitant to pull the trigger today. Well, you need to, again, go to your let's do a front camera for a bit. So you need to go to your stats, right? So go through your stats, go through your best product. I know you like NQ and ES and YM, as you've said. I mean, I've seen you talk about ES and NQ. I didn't know you do YM as well. Out of those 3, what is your best performing product? So which one do you have the highest accuracy? Which one brings you the best profit margin? And which one you feel more comfortable with, right? So sometimes you can have smashing numbers, but you're not exactly comfortable with the product that you're trading. So yeah, I would go back and I would see which setups have worked for you. Now, with the Blahtech indicators, obviously I have a very easy way. Even if you're not a coder, you can still be very, very analytical, but just going back and seeing which levels worked when, what sort of setups. Like, here we go, we have a partial failed auction here. That's New York. Then if I go back further, let's find another New York session. There's another partial failed auction here that got stopped by this supply over here. So, you know, that's like 2 partial failed auctions that might have been able to give you 1R, 1.5R, you know, and that's the process. Here's a failed auction that went all the way down. So you don't even have to like be a coder or anything like that. Let me just clean up the chart again. So every time you look at your stats, it's so revealing and it makes things really easy. Now, obviously, I know that I'm actually pretty good with ES, but only for that later part of the session. So if I want to do stuff in the day, like, remember, I'm in the UK. So the final part of the session is actually between 7 to 9 p.m. Like, usually I'm out walking my dogs, or I want to go grab a bite to eat, or I want to lie down and have a bloody nap. You know, I don't want to because I wake up at 8 a.m. in the morning, like, you know, so it's a very long day for me. So by the time that I get the proper high probability setups that I want in ES, I'm already like, dead. So, you know, you have to match your lifestyle to whatever, you know, whatever product you want to do. But when it comes to DAX behaves extremely well. Like, DAX is very technical. It gives you ample time to make a decision. It's not like crude oil, where timing is of the essence, where you're like, oh my God, if like blink and you miss it. It's not like that. It's very, very calm. It moves quite a bit, but it moves in a very logical way, especially if you use the market stalker's levels for orientation points. There will be very few days when you're like, yeah, what the hell's going on here? It's so logical. And I was so happy that Apex allow people to go on Eurex, because it's going to have so much repercussions and implications for my Australian students and even UK students who, you know, don't have a full-time job. They just want to trade in the morning. That is the perfect thing. Avinash says, I always trade with 0.5% per trade. Well, in futures, you can't really do percentages. That's great. Like 0.5% is great. But you can't really do percentages because there's no nano positions in futures. It's either 1 contracts or 2 contracts, whatever you're trading. So, yeah. Yeah, so Steve, Brian, you say YM for sure. So just focus on YM. You can always add more once you're funded and getting payouts. It's so much easier, right? And actually, when I got funded by TopStep, I think in the first run, I only did like crude oil. But then what happened is that back then, they wouldn't actually let you trade anything else unless you actually passed another combine. So I did the second combine because I also wanted to trade ES and Euro futures. So that's the one that was on the internet everywhere because I traded 3 instruments to such a consistency and everyone was like, oh my God, how's she doing that? And it's literally just tight budgeting. Nothing more. It's nothing, you know, super unusual. It's just risk management or budgeting. I don't like the word risk management, I've decided, because I think it puts the wrong mindset. So let's talk about getting funded and blowing the account because a lot of people, well, actually cash flow is saying something here, but yes, male traders have 20 times the testosterone in our veins. Totally true. Actually, I think it's 100 times for some people, interestingly. And I think a lot of our self-sabotage and massive success comes from that compared to women traders. But there's no success, though. This is the problem. The 90% of prop traders, even those who get funded, they blow the funded account within 3 days. So let's talk about why. Because there is a reason, and it has nothing to do with testosterone. Because actually, I've known a couple of women that have done the same thing. So what gives? What the fuck is that all about? Why do you get funded? You trade so well in the challenge, and then you come to the funded account, and 3 days in, you're like knee deep in the drawdown and you're pulling out your hair and you're just like, it's gone. It's to do with dopamine levels. So what does the dopamine do when you get to reach a goal that you've been like lusting over and you've been working really hard for? You know, you might have been learning for like a year with the market stalkers and you're like, wow, I finally got funded. Well, you get a dopamine rise. You get a squirt of dopamine as a reward in your brain. Now, when that happens, you actually get an increase in productivity and motivation. So if you have ever done the whole, or if you ever had the urge to trade on a new funded account, I was actually talking to James Thorpe from, it was James Thorpe from Trade Day. And he said there was one guy who passed and he was like, right, mate, just take it slow now, you know, and already he was badgering him throughout the entire weekend. Where's the account going to be ready? Where's the account going to be ready? Where's the account going to be ready? Is the account ready? Is the account ready? And then the account was ready. So he got access to the account. And effectively what happened was he blew the account like right away because he opened up 3 NASDAQ positions on a Sunday evening as soon as the market's open. It's like, Why? Because of the dopamine rise. Dopamine rise. You get you're so motivated to trade. And that's a great thing in any other business apart from trading. Because that means that you're going to get an urge to trade, an irresistible motivation to do more. Because now you've reached this. Let's do it. Let's do it. Let's get it, guys. Let's get it. And then you get it wrong. You are not thinking clearly because your brain is floating in bloody pleasure chemicals. And then what happens? You get yourself in a drawdown. Then you're like, oh shit, I need to do another trade now. And that's all just motivation and extra productivity coming from the rise in dopamine. So if you're not aware of that, it will fuck up your account in 3 days flat. 1 day, sometimes. 1 day. But if you know this, it has nothing to do with testosterone, and all to do with the dopamine rise and crash, because you actually crash. But you really don't want to, you don't want to get excited. But it's difficult if this is your first funded account, right? Because it's something that you've been working for. It's a huge milestone. So in that case, we have to approach it from a different way. Yes, we know we're going to have extra motivation. Yes, we know we're going to have extra productivity on that day or that week. But that's why you need to be aware of it and come up with a plan of action. So first thing is trade the smallest size possible. Like going for a 50K account, the reason why I say just trade the micros, it's not going to be forever. Whoever got funded with me guiding the process on the gold membership, it was never like, yeah, go in and just whack in. I mean, there's only very few people who are able to do that. I think Ray Trundy, he's in here. He was one of them, because back then there were no micros, or maybe they got introduced, but no one was really doing it. And I don't think TopStep had them for a while. So because of that, you need to be aware that you have to trade small. Expect that you will want to trade more. And that means you have to lower your position size so that you don't create a big hole on your new funded account right away. So even if you do like 3, 4, 5 trades, if they're only $30 each, you will still come away from that first day having lost like maybe 5 of them, and you can just go, oh God, this is a dopamine thing, isn't it? It's like, oh God, I'm just screwed by the dopamine. I need to fucking chill. And then go away, do some exercise, do some meditation, move away from trading. Maybe don't trade for the rest of the week if you get hit by this, and wait until your dopamine levels come back to baseline. I'm sorry, guys, to break it to you, but the dopamine levels actually take anywhere from a month up to 3 months to normalize, okay? So if you're very elated, the more elated you are about your funded account, the more increase in productivity and motivation you're going to experience. And that's a terrible thing for a trader, the worst thing. But by being aware of that, we can get ahead of it and we can be a little bit smarter. This is why the Market Stalkers family exists, because even the Silver Plus members, I can guide that process for you. I'm not going to give you feedback on the trades that you've done, but I can say, okay, now that you got funded, let's go down to this level. Let's just trade with 1 micro, depending on the size that you went for, and let's just do it right. Even if you fuck it up royally on the first day, you can still walk away with just like, $150 drawdown. And that's easy to get out of, okay? You're not making a huge hole in the trading drawdown. You're just recognizing the extra productivity. So you're giving yourself a little bit of an outlet for that whole thing to happen. And then we can move forward. But blowing the account, like HM says, blew 3 funded accounts. I know you've been talking to me in the comments, and this is probably what you experienced: additional productivity and motivation from a dopamine hit. So and less is definitely more. Yeah. Cash flow also says, I think the big issue is also the education. A lot of the marketing in the industry has ridiculous expectations. Gurus claiming they make 10% amount consistently. Ostentatious Trader Boy says, ostentatious displays are a sure sign someone is selling. Yeah, leaning on a Lambo, that's just run away. Yeah, just run away. So yeah, one of the reasons why I'm doing this DAX experiment is to show you guys what's possible with, even, if you're not a perfect trader, even if you take a full month to get funded, that's still much faster than somebody who's going to be grasshoppering all over the place, changing systems, changing levels, not using levels, even worse, doing stupid stuff constantly, somehow, get funded and then blow the funded account. But if you already got funded, it means you've got some skills there, especially if you got funded without a million resets, okay? So if you signed up for a challenge, you pass the challenge, and then you blow the funded account, that's a dopamine problem. It is not necessarily a skill problem. It's just that you allowed the monkey part of your brain to do your trading for you. But now that you know this, now that you know what the cause is for this increased productivity, like, tell me, honestly, when you got funded, because I know a few of you have, did you experience an immense urge to trade like immediately as soon as your funded account was open? Be honest. Yeah, cash flow, that's not exactly true. It's 1% of what their Darwin does. This is why I'm not really, like, I've met the CEO, cool guy, love the whole owl concept because I go for the whole animals. I have a reptile as my mascot in the company. But I don't agree with that statement because I have seen prop traders in my career that have actually made double of the prop trading account and not really trading very much. So what he's talking about, he's using the Darwin scalability of what the guy is doing. So it's not impossible, but is it difficult? Yes. You cannot expect that you're going to be making 100% in a month. That's definitely not realistic, especially not if we're talking the nominal values rather than the maximum drawdown that they give you initially. Because let's face it, most of these companies, that all of them have maximum drawdown of some sort, right? That is the real account that you start with, okay? It's the real account. So you start with 2.5K on a 50K account. But it is still a risk-free to 2,500. It's not your own. I actually disagreed. ICT did this thing on Twitter, and he's like, yeah, if you take your own $3,000 and then you start trading that, you would be drawing money. That's not true, okay? You take the $3,000 of your own money, you blow it. Why? For the same reason that we blow the funded accounts. Increased dopamine, productivity, motivation. Oh my God, I've got a funded account. I've got to trade. And then tomorrow, poof, the 3K is gone. And then what do you do? Some people only have 3K. Like, what the fuck is he talking about? That's so unrealistic. I'm sorry. It's just, again, talking about non-realistic shit that people say. That's one of them. Like the fact that he doesn't see 3K as anything. Like, I don't really see 3K as that much money either. But he doesn't understand that $3,000 is a lot of cash for some people. And that's the only cash that they have. So they can't just blow it. Like, you're supposed to trade with the money that you can afford to lose. Unfortunately, we have the worldwide crisis, right? We have living cost crisis. We have so much bloody crises all over the fucking place. And he's going, well, yeah, I mean, just put 3K into account. Well, what is easier, to pay Apex peanuts plus Eurex, whatever the thing is, and then trade that with the ability to reset if you do fuck it up for whatever reason, or to spend your own 2.5K, blow that, and then having to find another 2.5K and another and another and another. That gets bloody expensive, man. And it never ends at 2.5K or 3K. So that's complete nonsense. I'm sorry. I've seen people who have not blown 3K, but they have blown 50K, 100K. This guy, one guy on my channel said, I blew all of my savings. It was a 6-figure account, high 6 figures. High 6 figures he blew on trying to learn how to trade. Is that normal? No. Is it something that people do? Yes. Even if you have $10,000 in savings, technically having only $10,000 in savings is not really money you can afford to lose, is it? It is your nest egg. So don't spend it on trading, okay? Offset the risk to the prop firms. Yes, there's negatives. Yeah, there's negatives to everything. There's positives and negatives. But your best chance of learning properly under pressure is to go to a prop firm. So I really don't agree about using your own money and then going to Darwin X, where you're going to spend the best days of your life trying to make 15% performance fee. It's not very realistic. I'm sorry. So cash flow. It's very different when you are... Oh, that's a useful thing. So Tanner Gok says 48-hour fasting can help you decrease dopamine levels. Yeah, if somebody can do that, that would be amazing. So if that is, that could be a way to lower your dopamine levels faster. There we go. So we're using everybody's knowledge here. Nice. So cash flow, I would say so 100K is not enough, okay? But, whatever. So you really, if you're going to trade full mini contracts, you should have like 250K per contract. That would be the safe thing to do. And if you're doing that, anytime I'm trading in my main account, so I only use 0.3 0.5% or maybe 0.4% if I'm like using a slightly larger stop loss or something. So I typically do anywhere between about 3% up to 8% on that account. But again, that is not how you should treat smaller accounts, because again, it's a smaller amount of cash. One of the ways that I like to look at things is to work on the assumption that you're going to pay yourself out like 20% of the profits made. And then what would be a valid sum for you to have as a working capital? Because the 100K that you mentioned, that would be a working capital, right? It's not profits. So if you can basically have the kind of risk that will allow you to draw down meaningful sums of cash from profits that are 20% from profits, that's what you should start with, right? So and that will vary for everybody, right? The reason why I like prop firms is because you can be more aggressive, because you have the backup of having another account. It doesn't matter. So actually, I'm pretty aggressive when I come up with a buffer. I go scaling up really fucking quickly, right? But this first part, before you get to the minimum balance, that has to be taken with a lot of care. You have to give it so much time. And in fact, I have 8 Apex accounts. I don't trade all of them on the immediately on the Replicanto thing. I've spent the last year and a bit getting each of that account slowly up to minimum balance. Okay, slowly up to, so one account at a time, not all 8. Okay, this is stupid. I see these people that are like, oh, yo, bought 20 Apex accounts. Do you know that you're going to have to pay an activation fee for each and every one of those accounts, yeah, if you get funded? So they're like, I picked it up for $300. It's like, yeah, but you're going to have to pay 3.2K for all of those 20 accounts if you get funded. So what's going to happen then if you don't have 3.2K? And then if you pay the 3.2K and you blow all of them in 3 days, then what? Then what? It's just, just don't get me started. It's ridiculous. Yeah, so basically when I say realistic returns without a prop firm, I personally can say it's anywhere from about 4 to 8% on such large accounts, okay? When I had a 250K account, which for me was a number of years ago, I did use around 1% per trade, okay? So that was pretty aggressive. But at the same time, back then, I was a swing trader, so I wasn't doing like 3 trades per day. When I started doing 3 trades per day, I made sure that I lower my my position size. So everything has to be done, like, can you lose this money? If no, you have to be very careful with your risk management and positioning. Is the account large enough to use such small positioning and to actually be viable to trade with? That's the real question. Because even if you have 100K, but you're like, well, I'm only going to use like a really tiny amount, can you actually make that work? Like, would that be a viable, like for the amount of cash that you've just invested in that account? How many years are going to have to work until that comes back? Because there's so much risk involved. It's 100K. And, if you're somebody who's got, a net worth of, I don't know, $1 million, then yeah, 100K is probably not that much money. But for most people, 100K is a lot of cash to use as working capital. Not everyone, obviously. I do have some very wealthy market stalkers. But still, I would still say first go to a prop firm, then use that money to fund your personal account. Because you can do a reset. You can, like Cashflow said, you ran 3 funded accounts. It's fine to go 3 funded accounts, but use them as backup, okay? If you know that you've blown them, for example, like HM has also blown 3 accounts, make sure that you use them as fallback. Don't use them all at once. You start trading, you run Replicanto or one of those copying things, and you fuck it up. Like, don't do that. Yeah. Let's see. Avinash says, thanks for that. I'm new to Apex and I will keep this in mind. Yeah, absolutely. Cash flow says, I know you trade futures and can find an edge, but when it comes to Forex, I think that below the daily chart is just noise. No, actually Forex and futures is just a different asset class. It's kind of like saying, oh yeah, well this thing is what would be different would be, let's say, equity options and a plain futures chart, because that's a little bit different. Well, very different, because you have Greeks, you have implied volatility, you have a whole bunch of other things that impact the movement of the price. Forex versus futures, you actually have Forex futures, exactly the same thing. The only difference is that in Forex futures you might have a contract that changes every single month. The levels are the same, everything is the same, but Forex is not a good asset class at the moment. I actually did a video on this last year in 2022, and I said 3 reasons why Forex sucks in 2022. Very aptly named. Why? Because the liquidity sucks. Like, I've just spent a whole fucking however long I've spent here talking about GC and ES dwindling in liquidity, yeah? Well, Forex, like, if I say that GC has a low liquidity at 100 ticks per day, Forex has spent the last 11 years having 40 to 60 ticks per day. Per day, not even per session, per day. Now that is what makes it difficult to do. This is why we always, whenever somebody comes to me as a Forex trader, I always say, why? Why are you trading Forex? So let me drag out a chart. I don't know whether AMP actually has, I think it has euro dollar, but it doesn't have, no, actually it has euro futures, doesn't it? So let's do euro futures, but it is very similar. I'm going to drag out both so you can see what I mean. Okay, so these are futures. I don't know whether the contract rolled yet or not, so if it did, let me know, and I'll drag out another one. And let's do euro dollar. Now euro dollar is not, oh, it is available. Oh, okay, that's weird. I didn't think they had it as an option, but lo and behold, they do. However, some of the calculations are probably going to be slightly off. So what do I need? I need to undock that. And you will see what I mean. It's just a name. Levels are the same. Price movement is the same. Let's get rid of this. It's just a different asset class with slightly different behavior, but same problems because it's the same bloody thing. Okay, here we go. Left side, futures, euro. Right side, outright euro dollar, spot. So let me get my head out of the way. Does that look different to you? What do we have? We have open below value, open below value. We have a slight pop downside, slight pop downside. It's the same bloody chart, right? Yes, the ticks sometimes are different, so the prices sometimes will be different because actually futures should be different. And the closer you get to the expiration of the monthly contract, the more and more closer in price the two assets will come, okay? But futures are directly derived from spot. So it is the same thing, it's just this is a lot more regulated than this, but both still suffers from the lack of interest rate differential across the board between the two countries. Everybody's now raising rates, right? Rising rates. Everybody is doing the rate hikes, but unfortunately that still means you don't have the differential between the two, which brings momentum. There's like this whole underlying thing that happens in the currencies of the two countries that brings momentum, right? And this is why traditionally when you had pairings such as GBP New Zealand, that was like going 1 million ticks per day. Like there was a day back in 2011, I think, we had a day when GBP New Zealand went like 550 ticks in a day. Like insane. And now you look at it, it's like, yeah, 80, 100, yeah. And why? That's why. So, and now let's have a look at NASDAQ, for example. So that's pretty lively. I mean, even crude oil, if we look at crude oil, it would be still the same. But crude oil, let's go. So I will tell you what you're looking for these nice intraday trades. So let's go to this day. So not the biggest day, but have a look at the difference between the size of the V-shaped moves that we have. So we have one move down, then we have another move up, then we have another move down. So that's 3 trades technically, or 3 moves that we can see, right? Then if we go, okay, this was quiet. Let's go to a part of the year where it wasn't that quiet. So this was, here we go. So already in July, I mean, it was pretty lively, but yeah, let's go back. Because June was pretty excellent as well. This is an old contract, so it's just for reference. I am going to go back, but it's not going to be like super accurate because obviously we have a different contract. But still, look at the moves, right? The moves. Extended move up, very extended move up. Not just, yeah, and then we stop and don't go anywhere. No, this is like nice 130 ticks extension after the initial balance was created by 62 ticks. Then over here, the previous day, we go all the way down, and then we reverse and go 80 ticks up, and then again all the way back down. So all of these kind of V-shaped moves gives you a lot more opportunities in a day. And yet, euro, yeah, and all of this, 37 ticks range, and now it kind of extended a little bit, but still it's like pitiful. This calculation is not right because it's euro dollar, and this is not, it's not a good contract. It's not a contract. So yeah, but it's basically the same thing. It's just that the extended moves that you see on something like crude oil, even gold is now slow, but it moves throughout the most of the year. ES and Q, they give you these extended moves in one direction, then extended move in the other direction. And it's not 30 bloody ticks. It's like 70, 100, 150. So you tell me which one is going to be less frustrating. Trading euro dollar that has like one move that's very difficult to catch, and then nothing forever. If we go back, here we go. Another one, which is like barely, this is 20, 22, 23 ticks. Barely, and then it stops. Like, how are you going to make money on 23 ticks? You need extended movement. That's why liquidity is so important, right? Tenor, Collective 2 is Rod's baby. So Rod Casilli, I know Rod Casilli very well. We actually did quite a lot of stuff together last year. They also had some regulatory things, but yeah, Collective 2 is actually a really good choice. So, like I said, I know one of the directors. Yeah, so Rod Casilli is, that was his thing. So he created Collective 2 with 2 of his other mates. So yeah, very, very good company. Cashflow says, swing is so much easier compared to intraday. Yes, I agree. Yeah, swing is easier, but to me, nothing is rigged. No, it's not rigged. I mean, it's not rigged. You're just not looking at the right levels. But swing is easier. I will give you that. I was a swing trader for 5 years, from 2008 till 2012. And then I decided that my skills needed to come up, because I knew that my skills weren't enough. And then I discovered Market Profile, obviously through an apprenticeship. I carried on being a student of Market Profile, and then I realized there were some issues with it. And me being me, I had to improve upon that. And that's what the Mark Stalker's method is all about. Mike D says, thank heavens Japan isn't rising. Well, there was a thing called yen carry trade that doesn't really exist anymore. So I would like that to come back, because that was one of my ways of running a swing trade, since we're talking about swings. It was actually one of my really, really good strategies. I was using a strategy based on co-integration. So I had a basket of pairs, and a couple of them were yen pairs. One of them was New Zealand and the other one was Aussie. And then we were pairing that up with the lowest interest rates, supply and demand levels, and then some very particular algorithmic measures of like how much the price extends in percentages and where it turns around. Not something that a human could do. So yeah, I would like Japan to move off they were negative. Are they still negative? I don't even follow that anymore. Ralph says that's why CFD is banned in the USA. Correct. CFDs are broker dependent, and also the fact that now DarwinX are offering CFDs to USA residents. Like, what the hell is up with that? It's a bit dodgy. Bolinox is a good firm. Luis, how do you pronounce it? Lewis. So yeah, Bolinox is a good firm. If you're looking for a firm that will fund you into a live account, I would say TopStep, Trade Day, and Earn to Trade. But Earn to Trade still has a hard daily loss, so that's difficult. Trade Day are excellent. Very, very good firm, like super reputable. Two proper guys. One of them was a floor trader. The other guy was a stockbroker. So again, very, very legit people known in the industry. They do have challenges that are not the cheapest, obviously, and they are mostly like 2-to-1 drawdown to target ratio, which can be more difficult. So that means that scalability might be a little bit limited, but at the same time, there's so many things that they can do for you. They do offer 1-to-1 coaching for, I think, 100K onwards package. And even when you get funded on a smaller account, you can still reach out to them and say, hey, can you set my drawdown daily loss limit, soft daily loss limit, to be 250? You know how I was doing DAX on a 250 loss limit? Well, you can actually reach out to James and Steve and just say, hey guys, just put it to like 150 for the first part of trading. And that will limit you automatically. You won't fail a funded account, but it will cut you off on the days that you're going crazy. So it gives you peace of mind that you don't have to control yourself. They are the only company who does that for you. The only company. TopStep is amazing. You guys know that I'm really tight with TopStep guys, and in fact, I'm going to be on TopStep TV at some point very soon. So obviously keep your eyes peeled on their emails and whatever, because they do all the marketing. But they always do ask me to kind of do my side of marketing, and I think I'm really shit at it. So yeah, it's probably better if you look at their marketing. But yeah, so like I said, TopStep, Trade Day, and Earn to Trade if you want to get funded into a live. If you're looking for a cheap entry into a pretty good leverage and account sizes, then obviously Apex, like I am with Apex for a reason. I absolutely love Apex. Whether they're gonna come up against some of these regulatory measures, because they do fund people into SIM, I don't know. Obviously, I can't tell whether that's going to be a problem or not. But because they are still a futures company, I don't think, like, they might make them fund people into live. Whoops, pressed the wrong button there. So that could be a slight issue, but their data feed and their everything like comes from the futures market, so it shouldn't be, it really shouldn't be a problem. BHB Hilo says, what problems do you think Market Profile has? Well, the ones that I've stated in the program. So we've done, so for those of you who don't know who I am as much a trader as a researcher. So I basically am very big with statistics and data analytics. I like crunching numbers. So my research as a trader involves doing probability measures and counts around particular levels that other people have stated are high probability levels. So Market Profile has a lot of those, and even though for a number of them, I would say that they are valid strategy ideas, I do think they overshot on the accuracy quite a bit. One such example is the value acceptance that is touted as the 80% rule. It's nothing of the sort. It's 58 to 65% depending on the product, time of day when it happens. So whilst the strategy itself is correct, you also have other problems. Like, for example, if you have the value area that is tiny, yes, sure, you have the value acceptance, but how are you going to take advantage of that? The value acceptance target is the other side of value. So full rotation through value. So if you don't have the profit margin, that's an inherent problem with the setup. So that's never mentioned. They're just like, oh, no, 80% rule. So I think it was like very discretionary. So from my point of view, I basically went a step further to quantify the setups, to use some of my concepts that are very big helper concepts, like, for example, the various uses of average daily ranges, very particular times of day where I've seen events happen over and over at a rate of anywhere from like 60% up to 77%. So that's what I teach. I basically teach something that all professional traders know, to be fair. Like whenever I worked in a prop trading company, there was always like, hey, yeah, ES. And now when I was in the States, it was like, yeah, well, you know, things kind of turn around 1:30. And I'm like, yeah, I know. So they're like, yeah, I'm just going to wait until 1:30. So everybody knows about those times of day. But, you know, it's like nobody said it. Everyone is like, well, I don't know why it's turning around. It's like, yeah, retail traders don't know about this. Professional traders all know about these very, very important times of day that I quantified, put it in a course, and I'm laying it all out. And that's why people don't like me, because they're like, oh my God, it actually works. And the thing is, I don't really know why. I don't know what's going on downstairs. My dogs have suddenly decided to go batshit. I don't know why. Ridiculous. Someone is howling. I think that's Leonard. My Leonard is deaf, by the way, 70% deaf. Cashflow says, do you believe 99% lose mainly due to psychology or misinformation? Both. Let me just deal with this, because this is ridiculous. Okay, so we got puppies in the house, so sorry about that. I'm just trying to get them to settle. And one of my cameras is going a little bit. Why is that not connected? Let me just check something. Nope. Okay, so we're down to one camera for some reason. Right, so let me get some puppies here. Yeah, so cash flow. I think 99% is a little bit of an overshoot, and it's actually closer to about 70% of people lose. So I think it's a huge, it's a huge random number that somebody has once decided to just say out there, but it's really not the same. So basically, it is both a misinformation because people think it's gambling and clicking buttons, and it's also the psychology part because people are unprepared for what the psychology should be, and it's difficult. It's kind of like training for an Olympics. So most people are not going to be able to especially in intraday trading, most people don't have the self-discipline or the focus to keep doing this for a long periods of time, because you cannot have like the problem with intraday is that it's out of all of the styles, it is the most sensitive to any inconsistencies that you have as a trader. Okay, so that's a huge problem. Let me change to a chart. We have Astrid in the house. Hello. Do you want to say hi to everyone? Why were you making so much noise? Huh? Why were you making so much noise? This is Astrid Mimi. Hi, Seven. Yes. Hi. So yeah, because of that, you are effectively looking at being massively behind the pack if you don't have a good education about trading right away. So, you know, RSI and all that bullshit is not really going to make you a good intraday trader. Awareness of risk management is also really dodgy. Like, people are like, oh yeah, using 1 to 2% per trade. Yeah, maybe on position trading or swing trading, that's fine, because you're not going to be trading that often. But if you're trading often and you are still using, you know, intraday trading is 3, 4, sometimes 5 trades per day. If you're trading multiple products, that is the end goal, to have 3 to 4 trades a day in multiple products. But it takes, you know, a lot of practice. It takes a lot of data and number crunching. And most people are not ready to do that. They expect that they're going to be smoking spliffs in Hawaii after spending a month learning a few levels and clicking buttons. That's not going to happen. Hey, very loud. You've been very loud. Yeah, so that's pretty much it for today, guys. I think we had a very, very good session. Don't forget that the bronze membership is on sale for 60% for this week, maybe even for September. I don't know what the marketing team has decided. But basically, you can use the code FREEDOM at checkout. And then if you want to upgrade at some point, you can do so. The link is down below this video, so make sure to check that out. So let's do this all over again next Thursday, because now I am going to be doing live as usual for members on Thursdays, but every so often I will open them up for the public so that we can have a very, very good discussion. Don't forget to subscribe to the channel, and I will see you again next week. In the meantime, be less grasshopper and more market stalker. Goodbye.